Hello, hello. Good morning and good evening. So I think we are going to be bearish, and because we have this this fair value gap, we are respecting this fair value gap, and also this NDOC, this new week opening gap, we have respected this. So we got a reaction from this candle. We got a like a rejection candle also, and on a daily, if you see, this is the bearish fair value gap, the red bearish fair value gap. Yeah, bearish FVG. So it is also respecting our bearish idea. Okay, and on a 15-minute, we have taken out the buy side liquidity. The London has made a high of the day. We do have this as a pre-market liquidity. So on a pre-market, this will be a buy side liquidity for the pre-market, and I will like to mark this low as in previous day low. Previous day low. Okay, this is the previous day low, or I will just use this as an previous day low, and this one will be the 3 days look back. 1 2 3. The liquidity, it will be the 9:30 a.m. session low will be the first liquidity. Second liquidity will be the this one Asia low, and I wanted to mark down previous day PM session low also. So this is the 12:45 13:30. Okay, so this the Asia low and this low, it is almost same for the PM session low. So this is the PM session low. If I mark this on a RTH chart, you're going to see this as an PM session low. This low, yeah, session liquidity. Okay, session liquidity. We are going to refer this, and on a yesterday, this is the yesterday's PM session low. So this is the nearest drawn liquidity on RTH, and we do have a failure swings. And also the red, I mark this red because it is the important level, and I wanted to mark this high also, previous day high. Yeah, this one will be the previous day high. So we are going to see how the market is going to go. Okay, and let's see. Let me check the daily 1 hour. On a 1 hour, even though we have closed this thing, if the 9:30 has done some kind of manipulation to the upper side before going to the downside, it will be the fantastic, and this fair value gap we will mark. So we have marked down the liquidities and the inefficiency. 15-minute. This one will be the low resistance liquidity run. 8:30 has done some kind of manipulation to the downside, and we are also creating the failure swings on a 1 minute. Okay, so if you see, we have a big gap down, and we also below the sell side liquidity. So this one will be the nearest buy side liquidity, and we do have a SMT with ES. So let's see how these fair value gaps are going to support this fair value gap, the upper one. Price action is so wild right now, and we also have a 10 o'clock news. So let's see. I don't want it to punch random orders, so I will wait. uh, I also use like a daily and weekly profile. If you see, the price is struggling to go up, okay, and we have flipped this fair value gap, and this one I don't think so we are going to means going to support, because price is already consolidating over here. So this high is the most important high, because this is the session liquidity. Let me mark the 7 o'clock. So this is the 7 o'clock highest high. Price has taken out this low. We also have a opening range gap CE. Let me check what is happening on RTH. Hmm. And still we don't have any fair value gap. Let's see if we do close the this body. Otherwise, where the market is going to go, the sell side, because right now market has not given us any kind of signature in a price action. If you check the prices, shown us something like, okay, we are bearish, and also we did not close above this, and we have break down this low. This one will be the nearest drawn liquidity. The external target, I will look for this low, previous day low. We have a manipulation to the upper side. Hello, good morning. This low, it will be the nearest drawn liquidity, and this one will be the session liquidity for the yesterday's PM session low. This is the AM session low, and this is the PM session low. We have a failure swings. If you check the Tuesday has made at the high of the day. Thursday has continuation to the downside. This is the low liquidity. This one will be the also target. If the Friday has continuation to the downside, it will be this as a target. This is the first presented fair value gap. This gap. Let's see how the price is going to react on this fair value gap, because we have taken out the sell side liquidity. It was the pre-market low. Whenever you have a low between the 7 o'clock to 9:30 or a 9 o'clock, this is the pre-market highs and lows. Let me mark this as on trade. I'm expecting price should react and goes to the downside liquidity. Bearish FUG. If we have if the price is has a bigger pause, I want to see the change in state of delivery. Then we can confirm that this FUG is going to work. Without this order block, we are not going to confirm anything. And if you check, we are really near to the yesterday's AM session low. This low. This is not a. This is the low in a IPDA form, but this is the actual low if you look for the daily candle. The price action is so wild right now because every single candle is almost printing 50 points, and the market is so volatile. Like, this is the 1 minute candle and price has already given like an 45 pips. Hello, can you hear me? Hello, hello. I think the problem is from your side. My voice is correct, right? Thank you very much. Okay, so we have taken out the short term high. Okay, this is the manipulation. Today I'm not good. I am really not good. today something bad happened to our website and our data got deleted, but me and the ICT hustler has recovered the website. Now the trade weight is not down. The problem is from your side. This is a stop run inside the fair value gap. I'm gonna take this sell side trade. Best of luck, Jack. But keep in mind that market is really wild right now. Let's see how this auto block is going to support, because we have a stop run inside this auto block. The change in state of delivery is this one, and this is the short term low. We still have not have some kind of confirmation yet. If once we have a closure on this low, and what I'm looking for now, we are respecting this farewell this order block, okay, and we have a good reaction because this order block is also aligned with the session liquidity. This one will be the short term low as a draw, and the another one will be the previous day low. Try with the TradeWet website. It is okay if you are facing some problem, don't trade. In this change in state of delivery, we still don't have any fair value gap, so keep in mind. If this gap is getting flipped, then everything become not good for the bearish, even though we have a bearish thing, okay, bearish drawn liquidity, and we also have on a 5 minute, on a 15-minute, we do have a this change in state of delivery once we close this gap. Let's see. The problem with this setup is that we are below to the 8:30 and midnight, so we are in a deep discount. Okay, that is the first signature that we have a short term bias wrong after taking a sell side liquidity. I don't think so the market wanted to continue to the lower side. This fair value gap was important because this was the first presented fair value gap, and also it was aligning with the sell side liquidity and this sell side liquidity. If we close our body with this, okay, then the nearest drawn liquidity will be this equal highs, because I'm not going to marry the bias. I don't wanted to force my analysis. Okay, I'm only going to go for the bearish setup only. I'm not going to do that. And also, if you check on a 15-minute, we don't have any change of state of delivery. Let's wait. We don't have any fair value gap also yet. No, I'm not going to trade today. I'm not going to trade. Today is a not good day for me because my website was down. I was working for my website almost for the 4 to 5 hours, and I'm so exhausted right now. But still, I did a live stream for you guys because I really like to do live stream every day, and I like to interact with you. The market is not good. We will wait for the 10 o'clock, guys, because if you do something over here, even though the price is going to go for the low or the high, it is not a high probability because price is not creating any fair value gap, and we have tested this fair value gap a lot because see, one tap, two tap, three tap, and we have spent at this four tap and we flip this gap, and now check it, the one single candle, the one single candle, it is almost 74 pips, 74 points. So if you are going for the one micro contract, your stop loss is going to be like 140 pips, $140. Yeah, don't because the stop loss is going to be so wild. It is almost bigger than the 50 points, and I don't like to keep the stop loss more than 50 points or 45 points. My ideal stop loss always, most of the time, it will be it is 35 to 40 points or 45. I don't like to keep this much big stop loss, even though if price has shown me something. We are just doing the back and forth price action and high resistance liquidity run. Let me check what is on a Friday. Friday we do have three news in a one session, and President Trump is going to speak at 4 p.m. in PM session after the market has been after the market close. When the London has created the big range, and you already and market has already taken out the Asia low and this sell side liquidity, the two liquidities, two major liquidity. This is when you are going to see we are going to have the high resistance liquidity run because the all the most of the intraday target has been hit already. If you check the if you check the this this one, okay, this one was also the rough opening, and after that we pulled to the buy side liquidity. We need to have the London price action like this. Then only you're going to trade this 930 buy or either sell setup easily, and it will be the low resistance liquidity run. But you need to have a target and bias. Check this. We have a this big range. We have taken a sell side, then buy side. We have created the failure swings, accumulation, okay, consolidation, expansion, retracement, expansion, and after the 930 we have a slow price action because the price has already did the big movement in a London and also in a pre-market this big. This range is not small. I have watched so much videos, Deepak. I really watched so much videos. Like I have watched almost every content, but I have figured out that you don't need to watch this and you don't have to apply everything. I only work with the fair value gaps and session liquidities and the previous day's highs and lows. And then I check for the how the market is reacting from that area. If price is taking so much time, then you don't have to trust for that level. And also, if price is high resistance liquidity run, the price is not going to create any fair value. How much point of range do we consider as a large range? More than 300 to 400 points in overnight session. Nasdaq is moving. If you check the average daily range, Nasdaq is moving in AM session most likely like 200 to 400 points. And if the Nasdaq has given a big rally, then the PM session will be the slow price action. You always have to look for the which session has created the big range. And whenever you have a big range in a one session, let's say you have a big range in a London session, you have to skip the NY session. Um, I don't consider the GFT, okay, because I just saw the so much negative thing about those that platform. I don't like the GFT. My friend used to trade, but you don't. You should spend a good money in a good firm. You should buy the good account from the good firm. The firm they are they are giving the payouts easily, and their rules are not that much hard. It should be the trader friendly rule. Today's London session is the only, yeah. It is a big range, bro. If you ask me, it is a big range. See, this is the big range. You wanted to see this kind of price action in a NY session. You don't wanted to see this price action in London in overnight. You don't wanted to see this. What the price is going to do? It is going to take this buy side liquidity, let's say, because we have failed this first bearish FEG. We have a multiple market structure shift. We have flipped this gap. Now the market is going to go for this buy side liquidity. Even though if I know the market is going to go for this side, I don't want it to trade today. We have this fair value gap on higher time frame on a 1 hour. I mark this fair value gap, and inside this fair value gap, where is the real fair valuation? You have to mark this. This is the 15. This is the refined FEG. Let me check on a 5 minute. On a 5 minute, we do have this. So this is how you have to refine the higher time frame FEG to the lower time frame, and this is what I call for the refined fair value gap. And let me extend this to the right side, and this one also to the right side. This is how you're going to know, okay, if we got some kind of reaction from this, then market can do the V-shaped recovery also to the sell side. Yeah, most of the time the AM session will be choppy whenever you have a high impact news at PM session only. This fair value gap we have flipped, and this is the order block, and this is also the breaker block. I don't have a good accuracy in a gold ICT Batman. I don't have a good accuracy. That pair is not good for me. That does not mean that I'm a bad analyst. We are respecting this fair value gap, inverse FEG, IFEG, and this will be the nearest drawn liquidity, this buy side liquidity, session buy side liquidity. If we goes deep into this gap, then, and also if we are closing to the opening range gap CE, then we also have the 75% level. So this target will be the short term target. We have a good reaction, and this FEG was also important because this is the first displacement in a range after the 930, and this should be the target. Yeah, we exactly tapped the 75% of the opening range gap. This is why I always tell you, whenever you're if you're trading the Nasdaq, you always have the three levels: opening range gap, session liquidities, and see how the price action is reacting after taking a sell side liquidity or buy side liquidity. And you always have to wait for the change in state of delivery also. 5 years. Let's see the RTA chart. Um, Let me. If we close on this 75% level also, okay, then we can also go for this high. But right now we have tapped the refined FEG, the one I show you how to refine the 1 hour FEG, and we have a failure swings on this dealing range. Let me mark down the premium and discount. Okay, okay. So in a premium, this is the first high. This is the first high, and also it is also aligning with the Asian liquidity. Let's see. This is the Asia low. Today's Asia low. This order block. Let's see how the order block is going to work. Okay. It is also aligning with the opening range cap CE. Journal. You have to journal. You have to say what kind of mistakes you are doing. If we get a reaction, then only when to avoid AM session. When you have a large range day in overnight and pre-market, when you have a Fed is speaking at 10 o'clock, you have to completely ignore the AM session when that guy is going to speak. If we get some kind of confirmation for the shorts, then only we will look for. Let's see how this order block is going to go. Okay, we are inside this fair value gap, 5 minute. Because the 5 minute is bullish and 1 minute is still It is looking like an bearish because we have created the inverse FEG, and we also have a market structure shift. This one, let's see if we flip this gap, because then we will think, okay, the 5 minute is also bearish. The market is really bad today, because I'm not blaming on a market, but I don't like this kind of price action when the price is going to take a sell side, buy side, and then it is going to go for the sell side, or either it is going to go for the buy side. You can do the tape reading, but don't punch the trades. This is how you're going to train your eye also. Now, if you see, the 5 minute is bullish, right? For now, if we flip this fair value gap, then only we will get bearish. But now see, it is going to get expand. Now, this was the stop run after the 10 o'clock. This is why I always tell you, even though you have created this gap, we have to wait what the price action is doing. You have to wait. You don't have to jump on this fair value gap directly. 5 minute fair value gap. And now see, this gap, this gap, it get flipped, right? What is your nearest drawn liquidity? This buy side liquidity, and the opening range gap high. And at the downside, we don't have any SMT. But yeah, 5 minute is bullish. And I think the 1 minute will also get turned to the bullish because we have flipped this fair value gap. So this should be the short term buy side liquidity. And price should go to this Asia low and the opening range gap high. This was the stop run inverse FEG setup. Now where we are going to go for Asia low and the opening range gap high. And also we are going to mark down this high. Okay, we tap to this. Now this is the PM session high. This is the PM session high. This liquidity. And we also flipped this 1 hour FEG, and we have a great reaction from this fair value gap. By the way, guys, 61 people are watching me, and we only have 3 likes. Um, April, after the April, because the Jan, Feb, and March, this is where the market is going. If you look for the monthly power of three, you have to see what kind of months, how the power of three is going to happen. Like, an the Jan, Feb, and March is going to make a accumulation. The Q2 and the Q3 is the favorite one. Hello, please hit the like button, guys. Please hit the like button. We only have the 20 likes. We need to have a 40 at least. It is going to take only the 2 seconds. We have a three fair value gaps, first, second, and third. I wanna see how this middle one is going to work. And also in a 5 minute, we have we have tapped to the Asia low, okay, and we have also taken out this buy side liquidity. You need to see which look. For example, today's what I was saying you, okay, we have to wait for how the 5 minute candle is going to work, right? This 5 minute was bullish, and on a 1 minute we flipped this gap, this fair value gap, right? Most of the traders they was getting bearish because just because we have tapped to the buy side liquidity, but they did not understand that okay, do we have a two time frames in terms of bearish direction? We don't have, right? The 5 minute was bullish, the higher time frame is the key, because and the 1 minute is not a key. You just have to refine your entries on a 1 minute, because it will get flipped. This 1 minute fug ifug, it get flipped, and it hit your target like an Asia low and the opening range gap high. And also on a regular trading hour we have tapped this high. After this, I don't know where the market is going to go. I wanted to have a more information to decide the next draw on liquidity. By this reaction, but we have hit our main target, opening range gaps high. Okay, we have full closure on this gap. This was the good trade from this low, this FEG, to this Asia low or opening range gap high. Mm, I have a neutral bias. I used to have a bearish bias because of the daily, but we did not get any kind of reaction. If we have a reaction, if we respect the bearish PDR is now, then only I will look for bearishness. But right now we don't have any kind of setup yet. It is just a 20-minute window before opening the 1 hour candle. We see the 3 minute, 15 minute, and this is a high resistance again. But yeah. Mhm. By the way, guys, did you took any trade? What setup you took, Raj? Let's see how the price is going to move. If we flip this FEG also, then the price is going to go for this low because after the 3 PDR is 1, 2, 3, and also this 4. The next one will be this as in drawn liquidity. No, I don't take any setup, bro. Today is not good day for me. I already told you before starting stream because this FEG is also the Reaper. I don't want it to confuse you, but this low, lower low, higher high, and whenever you have a breaker, okay, and whenever you have a FEG inside the breaker, then those FEGs will be the high probability. Yeah. Deepak, you don't have to trade anymore. You have to shut down your PC and take a walk. You don't have to trade. Don't gamble. Okay, the nearest drawn liquidity will be this low for me because we have failed the 3 PD arrays, and this IFG will be the interesting one. And also we flip this opening range cap CE. The draw will be this and ORG low. Don't trade, okay, Deepak? I'm telling you, don't trade. Today is not a good day. Opportunity will be there tomorrow also and also next week. But if you gamble on that account, you have to pay a price. And every day is a new opportunity. You don't have to gamble because I have done this mistake so much time. And price can also return to the first presented fair value gap. This gap, let me use another color for this gap. This setup will be interesting one. we are done for the game. This is not a good day again. This setup was it was really good. We flipped two gaps on a daily. I just checked the okay. We tap to this internal range liquidity run. Okay, this is the premium and discount. This is the premium FUG. Okay, now we have a nearest drawn liquidity will can be this one. Okay, and this low of the yesterday's body, and then I look for the session liquidity for the manipulation to the upper side. Okay, we have taken out this buy side liquidity, this buy side liquidity, and also we tap to the Asia low. And right now, why I say like okay, this setup can be the good one, because we have disrespected the three PD arrays, one, second, and third, and this low should be taken out, or at least this low. Measuring gap is the something like if you have okay, let's say mm, how can I explain it? Okay, let's say okay, this is your drawn liquidity, this is your terminus, the target you are looking for, the gap you have at this range at the 50%, this will be the measuring gap. And the reaper is something like this. When you have a FEG inside this, the price should take this low. This one will be the sell side liquidity, this one will be the buy side liquidity. This is the stop run, this is the market structure shift, and inside this you have a fair value gap at this leg. This is how you are going to define the reaper. Projection is so fucking bad today. It is literally, it is a worst projection. The January was really bad, and previous week was really good for me. Yeah, I do invest in stocks, but it is a mutual funds. What I do, okay, this is not a financial advice, okay, but what I do, let me mark this IFG. Yeah. So basically, I if you have $100 to invest, okay, so I put the 30% in a low cap, small cap basically. The 30% on will it will be on a mid cap, and the 40% will be on a large cap, because the small cap it is going to take a I think 3 to 4 years or 5 years to turn that small cap into the mid cap, and the mid cap it takes like 10 to 15 years. And also whenever you have a fair value gap, okay, and price is not respecting to those gaps, you have to stay away from those markets. That is the observation I have done so far in a trading, because whenever you have this gap, let's say see this gap, we have a deep retracement and then goes up. So this gap also does not work, and we flip this gap, and if you check this gap, we also did not respect this gap or either this gap. If price was truly bullish and it really wanted to go up and price was the low resistance liquidity run, price should not behave like this. Go and do some back testing. Our trade idea was really good, but see how the market has fucked up. I look for the stop run at a session liquidity. I check for my what is my directional bias, and if I see some kind of reaction like inverse FEG, or if I have a auto block, then only I take a trade. I also wait for the reaction like this IFEG and IFEG. I waited for this reaction, and I was looking for, okay, we have a change in state of delivery. Price should go for the this as an sell side. But today's market was really it is a high resistance liquidity run, and if you check, we was also making the big candles like 74 points every single candle, and we have a big wicks on a day on a 5 minute. So this is how you have to stay away from a market. This low is still interesting for me, the 950 low, because we don't have any kind of manipulation on this candle, 950 candle on a 5 minute. And yeah, I have a simple model. I also check the two time frame if I wanted to take a trade. It should be bullish. Let me see the BTC. Guys, there is nothing interested in a market. Okay, we are just checking the other pairs. Don't have to trade. Always the heck 66. Price in a heavy bearishness. This low. I wanna see the price should go for this low. And if the price is going for this low, 50,000, if we break this neck, this area, let's say, because on a crypto the support and resistance is working really good. If we break this leg, then I don't know, we can also come for this lows, and crypto is finally it, because this is also the high resistance. We have a failure swings, flag, pull, flag, pull, and now we have a bearish flags. I have a friend, he is trading crypto for the last 7 to 8 years, okay, or 10 years also, and he has catch the bull run of the 2020, and he also catch this bull run again. And he's a really good friend of mine. I know him for 7 to 8 years, 7 years I think. He is trading only the bull flag and the bear flag. Yeah, and he's making ton of money. Okay, so 10:30. I'm going to close the stream. It is we almost have a 1 hour. And also what I'm going to give you the analysis for the post market right after the 9:30. If we have a change in state of delivery, this okay, 5 minute, let's say this, where we can go for the nearest drawn liquidity this low, and you can also mark the this low because we don't have anybody, and we can trade it. We can trade back to the opening range gap low because we are already consolidating at the opening range gap CE. Okay, so thank you very much for watching this live stream, and have a nice day. Bye bye, and don't trade this consolidation profile. We already have a big range in a overnight session. You don't have to trade anymore. Okay, bye bye guys, take care.